All right, let's get right into it. We're talking about a company that, in a nutshell, protects the very furnaces that forge the backbone of our civilization. It's not flashy, it's not glamorous, but you know what? It's absolutely essential. This is the story of RHI Magnesita.
So I want you to just imagine this for a second. You're standing next to a furnace that is just roaring with molten steel. The heat is unbelievable. The power is, well, it's terrifying. Now, what do you think happens if the container holding all of that liquid metal fails? The fallout isn't just dangerous, it is financially catastrophic.
So this really brings us to the heart of the business, what we're calling the 1600 degrees Celsius problem. See, everything RHI Magnesita does, every product, every service, it's all built around solving this one single critical challenge. In an environment this extreme, there's only one metric that matters: survival.
Okay, so what is the actual product here? Well, the slide redefines it perfectly. We are not talking about simple commodity bricks you can buy anywhere. These are what's called refractories. Think of them as highly engineered, mission-critical survival systems. Their only job? To contain hell on earth and keep that steel plant up and running.
And here's something that, according to our source material, most investors just completely miss. This product, it's not a choice. It's not some optional upgrade you can decide to skip this year. For a steel plant, having a reliable refractory lining is as basic as needing iron ore to make steel in the first place. It is, quite literally, existential. So, if you've got this existential need, how do you build a business around it? Well, this is where we get to the action part of the story. RHI Magnesita's entire strategy is the solution to that 1,600-degree problem. And it involves a massive shift away from just selling a product to managing the entire life cycle of the furnace itself. This slide right here illustrates the core argument of the dossier we're digging into. The wider market, for the most part, sees RHIM as just another material supplier. You know, a company that just goes up and down with the steel cycle. But what's really going on is so much more interesting. It's actually a furnace engineering platform, and it has the kind of recurring revenue you'd normally see in a software or a service business.
So how do they actually pull this off? Well, it's basically a four-step model. They don't just, drop off a pallet of bricks and leave. No way. First, they custom engineer the lining for that specific furnace. Then, they manage the entire installation. After that, they are constantly running analytics to optimize its performance. And the final piece? That secures them recurring contracts for when it inevitably needs to be relined. It creates this incredibly sticky customer relationship.
And this is so crucial. When a steel plant manager is choosing who to partner with for this, they are not just comparing prices on a spreadsheet. They are making a massive, high-stakes risk decision. They are picking the partner they trust to prevent that multi-crore per hour failure. And in that equation, reliability beats a lower price every single time.
Okay, so that's the story, that's the theory. It sounds great, right? But does this powerful business model, does this moat actually show up in the numbers? Well, let's take a look at the financial proof. This is where we see how the company literally turns extreme heat into cold, hard cash.
So let's start with some of the headline numbers, just to give you some context. RHI Magnesita India has a market cap of around 15,000 crores. Now, it often trades at a PE multiple that's at a premium to the rest of the industry, and this slide shows you why. The first piece of hard evidence, a consistently high return on capital employed, or ROCE. For the last 3 years, it's averaged over 26%, even hitting 28% in recent quarters. I mean, for an industrial company, that's just exceptional. It's a huge signal of a powerful competitive advantage.
And this isn't some recent hot streak either. Over the past 3 years, their profit after tax has grown at a compound rate of over 20% a year. And that, of course, has driven really strong stock performance. You can see this operating leverage in their margins too, with operating margins consistently in the high teens. And just look at the return on equity. It's been hovering around a super strong 22% for the last 3 years. This is the classic profile of a quiet compounder that, frankly, most investors tend to miss. Now, for any industrial company, this is the ultimate litmus test of quality. Are the profits you see on the income statement actually turning into cash in the bank? Well, over the last 3 years, RHIM's cash flow from operations has tracked its EBITDA at a conversion rate of over 90%. That is a massive signal of high-quality, honest accounting.
The profits are real. And yeah, we did notice a small dip in one quarter last year, but management explained on their con call that it was due to a planned inventory buildup for a big contract. Sure enough, the cash flows bounced right back the very next quarter.
And all that strong cash flow allows them to maintain what you'd call a fortress balance sheet. Their debt-to-equity ratio is a very comfortable 0.3. The global parent company holds a massive 70% stake, which shows a deep long-term commitment. Major capital projects, they're funded internally, and they haven't had to dilute shareholders to grow. It is just a picture of financial stability.
I love this quote from the source because it just perfectly summarizes the entire financial story. The business model isn't just about surviving insane temperatures, it's about translating that operational genius into tangible, consistent financial results, and that is a very hard trick to pull off.
Okay, so let's bring it all home in this final section. This is the resolution. This is the complete investment thesis that really argues why RHI Magnesita isn't just another cyclical industrial company, but actually something far more durable and special. According to the dossier, their future growth really rests on three main pillars. First, you've got the global shift to green steel, which requires totally new, more advanced refractories that RHIM is perfectly positioned to provide. Second, that move towards service contracts makes their revenue way more predictable and a lot less cyclical. And third, their digital monitoring technology adds this whole other layer of intellectual property that competitors just can't match. And here's the real kicker. These three growth drivers, they're not tied to the whims of the economy. The decarbonization of steel, the constant need for more efficiency, the adoption of technology, these are fundamental long-term shifts in the entire industry. They are, as the source puts it, inevitabilities. And so, we come right back to that central mantra of this whole explainer. It's a fundamental shift in how you look at the company. To really get it, you have to stop seeing it as a materials supplier and start seeing it for what it is, a furnace technology platform that has all the characteristics of a monopoly. And here it is, the ultimate conclusion from the source material. It's just such a powerful and memorable way to sum up the entire case. A technical monopoly protected by extreme engineering challenges, hiding in plain sight, right inside the heart of the steel industry. So the analysis leaves us with this final, really provocative thought. If you look decades into the future, say to 2055, will our civilization still need steel? Well, when you think about it, bridges, defense, EVs, infrastructure, it all depends on it. So the answer seems pretty clear. And as long as steel is molten, it's going to need a company just like RHI Magnesita to contain it.